Hey guys, welcome to Agera Capital, and in today's video I want to talk about these two things here that I have written down. The first one is risk management, the second one is taking profits, right? So I've been saying this for quite some time now, and I still believe, and I'll still keep saying it for the next couple of years until I'm done with trading, which is risk management is the most important factor in trading, right? And I learned this the hard way, and it took me some time to fully understand how important is risk management and how important is controlling the risk inside the trade and also outside the trade. And the second topic is taking profits. And taking profits, I'll just simplify. It's not really taking profits from your trade, it's more taking profits from your trade, right? So I'll give some examples. The first one, risk management. Let's just say I'll pick a couple of trades. So right here I have the 1 hour time frame. 1 hour time frame is to me one of the most important ones. The 1 hour and also the 4 hour time frame. So there's some time frames that I believe are more important than others. If we look at the 5 minute, I wouldn't say it's not that important, but it's just too much noise, right? There's a lot of noise. Sometimes it's hard to make a decision. Let's just say right here, if you were to make a decision right here, there's so much noise. If we look at it from the 1 hour time frame, you just see, 1, 2, 3, 4, 6 candles, and you know that you're making a high. So it makes a lot more sense for you to be entering a sell. So what I want to say is I like the 1 hour time frame better and the 4 hour and the daily. Sometimes I'll go drop down to the 30 minutes and the 15, but the 1 hour to me is the best. So let's get into risk management. What I want to say is I calculate how I want to enter the trade before entering the trade. So let's just use right here this sell right here for an example, right? The market is, first we notice that there's a gap. Okay, there's a gap in the market. Sometimes, well, most of the times we need to close the gap. So what I want to do is look for sells, right? And the most important thing when looking for sells is looking for areas of supply. So this right here is a supply zone. Inside the supply zone, you're going to look for candles that will tell you or give you some information on whether it makes sense for you to be entering a sell, right? So sometimes, let's just say this candle right here, to me is a doji engulfing candle right here. You have a little wick on top. Hold on, let me take this out. You have a little wick on top, you have a big body, and it's engulfing just 2 on the left. But after that, price pushed a little bit higher, and we then after went down, right? So let's just say, for an example, I, instead of looking for a sell in this area, I look for a buy, right? So I think we're breaking above this area of supply, and I don't know why, but I decide that I want to have my stop loss right here about 13 points. And actually, I'm not leaving a stop loss. I'm just going to let this trade run. And if we end up catching 46, so a 1 to 3, we're good. And if we don't catch it, I'll just scale it in. What happens is from 13 points, we go down to all the way to 80. This whole move was about 90 points, right? And so my trade not only becomes negative risk to reward, but I end up either blowing my account or losing a significant amount of money. So at first, I look at of course this is the wrong trade, but I look at my risk, right? My risk is about 13. First, okay, 13, my trade will be a 1 to 3. I already calculated how much I'm going to lose. And in terms of percentages, I think if we look at 5% is a high. If you look at a negative 5%, right, is very high for you to lose. So about 2.5, I would say, is moderate. If you lose about 2.5, it's moderate. That in a day, it's okay. And then of course, minus 1% is just break even, right? BE. If you lose 1%, okay, no problem. So calculate. Make sure you place a stop loss, right? Placing the stop loss. Boom. My trade, boom, hits my stop loss, I lose. Do I enter immediately for another position? No, you wait. So this is just one example. But let's just say you take 100 trades in a month, right? And every trade you end up losing 1%, or you lose 2.5%. So you're down 25, you're down 30% on just losing trades. And then on winning trades, let's just say you get a 1 to 2, 1 to 3. And you end up, this ends up becoming, let's just say from a 1 to 3, this becomes a 10%, a 1 to 2 becomes a 10%, this becomes a 5, and this becomes a 2. So every trade that you lose moderate, if you win a moderate trade, you're making double, right? So I can lose 5 trades at break even, and I'll still make one trade. With one trade back, I'll make 5%, right? And that is, to me, risk management. So I can't lose. This is, I'll just say, good risk management, and then this right here will be bad risk management. Will be minus 15% in a trade, minus 20% in a trade, minus 30% in a trade, right? So this is completely bad risk management. And then to make back this, you're gonna have to do 3 high risk trades to make that 10%. 3 trades that are high risk, you make 1 bad trade right here, right? So it doesn't make sense. And so I learned this the hard way. I learned this by taking so many losses and so many big losses. And once I really understood this, my trading started to change and I started to make more money, right? So I'm just sharing this with you guys. Now, taking profits, what I want to say is, let's just say, for an example, this scenario right here, right? Just made 10% in a day. So 10% in a day, what I do is, if I made 10%, so I'm positive 10% on a day, I withdraw about 8%. So 8% goes to my wallet. And then from that 8%, which equals 80% of profit, I then go and transfer. Okay, hold on, let me see. Transfer. This is transfer. 10% day, transfer 8% to wallet, and then from the 80% that I have in my wallet, so let's just say I have 8% in my wallet, I then transfer more plus 80% out to my bank. So 10% day, I leave 20%, I take out 80%, I leave 20% in the account, and from the 80%, I then leave 20% inside the wallet and then keep 80% in my bank, right? So I do this basically every big day, which is roughly 2.5% plus, right? And this way, I keep growing my initial account, my wallet, and my bank account, right? So And this is also something that I've been adjusting with time. And of course, risk management has helped me by taking better profits. And then, of course, taking profits from trade. If I'm in a winning trade, so let's just say I was just in Excel right here, I think it was about 82, and I left the runner. I caught about 8 points, so it's a 1-to-1 right here, close to a 1-to-1, and I close the trade right here. And sometimes I'll just leave a runner, right? So let's just say my target is down here. I'll leave a running trade all the way down to the second or third take profit. That way I already took the majority of the profit of the position, and then I end up either cutting my losses very short on the trade or let the rest of the profit run. All right, so this is it, guys. Hope you guys understood all that I'm trying to say. And to summarize, risk management is the most important factor in trading, and after that will become take profits, right? Of course, you need to learn how to trade to do all of this, and this is just my system on how I handle things. All right, so thank you guys for watching. This is a little bit different than our normal trading video, but just wanted to give the word out. All right, take good care and see you guys on the next one.